Risk appetite improves on de-escalation of tensions in the Middle East. Money flows from safe haven to risky assets again as tens of companies in the S&P 500 prepare to reveal their quarterly results in the coming hours, and among them we have the controversial Tesla. So welcome. This is Swissquote's Daily Market Talk. So the week started on a hopeful note after the de-escalation of tensions between Israel and Iran following Iran's announcement last Friday that it won't respond to Israel's latest attack. So in response, gold shortly fell below the $2,300 per ounce level in Asia this morning. Brent dipped below the $86 per barrel level as US crude tested the 50-day moving average to the downside. Equities rebounded. The SOX 600 index jumped past its 50-day moving average and passed the 500 psychological mark, while the S&P 500 in the US regained the 5,000 psychological handle. Now, on the economic calendar, we do have a series of PMI data on today's agenda. They're actually expected to confirm a slight improvement in global activity levels. But the data will also highlight the growing divergence between the US, where manufacturing activity is now gaining further momentum in the expansion territory, and Germany, which in contrast is still deeply in the contraction zone, with manufacturing PMI sitting somewhere between 41 to 43 range, and that's quite far from the expansion zone that's marked by the 50 level. So the latest PMI data from today will hardly prove those betting for diverging Federal Reserve and European Central Bank policies wrong, and should, on the contrary, back a further slide in the euro-dollar toward the 105 psychological level. Elsewhere, the yen bears are cautiously pushing the dollar-yen toward the 155 psychological resistance to see if that 155 level, would trigger a response from the Japanese authorities, which eventually won't matter much, mind you, beyond clearing the short-term bears, because in the absence of a hawkish stance from the Bank of Japan, while the dollar-yen will likely continue its upside trajectory toward the scary and the once unimaginable rate of 160. Cable, on the other hand, is slightly better bid after tipping a toe below the 1.23 level on Monday's trading session, backed by a growing chorus that the Bank of England could eventually hike its interest rates before the Fed. So voila, in the absence of major economic data today, like jobs data or growth data or inflation data, FX traders will continue to digest the idea that the US Federal Reserve is moving away from the rate-cutting dream and will let the US and European Treasury auctions and, the S&P 500 earnings gain the headlines in the next few hours. Now, note that around 180 companies in the S&P 500 will be reporting their quarterly results this week, and among them we have 4 big technology companies, including Tesla, which is due to report today after the bell. And the expectations regarding Tesla's first quarter performance are quite weak, to say the least. The profit is seen down by 40%, yes, 40% compared to the same time last year. The car deliveries were down by 8.5% in the first quarter of this year. The controversial price cuts didn't help Tesla gain market share, but they will certainly cause a sizable profit meltdown in company's first quarter profits as feared by most investors. But alas, the company decided that it would continue to cut the price of its electric vehicles again just last weekend, and said that Elon Musk is willing to cut 20% of jobs globally, after announcing just last week that it would already cut 10% of its global workforce and abandon the idea of a cheap Tesla model that could have well, simply boosted profits rapidly in the short run and prioritized Elon Musk's robo-taxi dream, which, on the other hand, will hardly show in results in a predictable timeline to actually justify the company's still hefty market valuation. Plus, thousands of Cybertrucks were recalled last week due to technical problems, and all the techno kings Elon Musk is pushing for his $56 billion pay amid growing controversies regarding his decisions and the future perspectives for the company. I mean, there is nothing good on the wire regarding Tesla these days. The company's share price and the PE ratio are going down rapidly, but again, there are not many barriers on the downside that could eventually slow or reverse the sell-off that we see in Tesla's stock price. So, in numbers, Tesla dived another 3.40% yesterday, and the PE ratio is now below the 55 level. And as I've been saying, the sell-off could continue if the company fails to convince its investors on 3 major points this week. 1. Are car sales continuing to fall after the sharp first quarter decline? 2. Is it a good idea, really, to continue cutting the price of the electric vehicles, provided that the latest cuts didn't necessarily help boost sales? And well, finally, 3, are robotaxis and self-driving cars realistic in terms of profit and growth in the foreseeable future? I think that the only hope for Tesla this week is all the weak expectations that could be more easily beaten than otherwise. But that's about it. We will see. Elsewhere, the optimism regarding the S&P 500 companies and their earnings reigns, actually, which to me is an alarming sign, mind you, because a recent Bloomberg survey actually showed that almost 2/3 of people who have been surveyed actually expected the S&P 500 earnings to give a boost to the S&P 500 valuations. That's apparently the highest vote of confidence for corporate earnings since the beginning of this poll in October 2022. And too much optimism kills optimism, because when confidence is this high, it often suggests that we are getting closer to a turning point in the market, because then anything less than absolutely mind-blowing will not justify a further rise in the already high market valuations. On the contrary, investors will be just looking for the smallest and the slightest misstep in these earnings to take their profits and walk away from the market. And indeed, we actually start seeing an increased volatility, which is a sign of rising stress among investors in the most popular technology stocks. In the sense, Nvidia lost 10% on Friday and rebounded just 4% yesterday's trading session. The super microcomputer tanked 23% on Friday and pretty much failed to rebound on Monday's trading session after telling its investors that it will release its results on April 30th without, however, issuing its usual preliminary guidance. The VIX index, on the other hand, spiked past the 20 level last week. So this earnings season will certainly not go down the markets and investors' throat as easily and as smoothly as the present optimism suggests, and even less so as the Federal Reserve expectations are no longer much supportive of the market and stock valuations. So that's it, really. So speaking of volatility, Bitcoin is slightly better bit right now after last week's halving, but slowdown in global risk appetite will likely cap the topside potential in the short run, given that Bitcoin has a strong correlation with the US technology stocks, and all the US technology stocks appear to be coming to a vulnerable and a slippery place due to uncertain reaction to the earnings and also the rising US yields due to a more hawkish Federal Reserve stance due to strong economic data. But if you want something quite decorrelated from the macroeconomic and technology dynamics, well, you have the cocoa futures still that make decent intraday moves in a jungle of headlines that help boosting one side or the other on a daily basis. So in the sense, the ICO now expects a bigger deficit this year in cocoa amid poor harvest in West Africa. So there is also the speculation that the price of a ton of cocoa could double from the actual level. So the bets are on and the volatility is there. So this is all for today. I'm İpek Özkardeşkaya, and thank you for joining me, and thank you for all your beautiful and supportive comments. I hope this episode of Market Talk has been helpful and it has been insightful to you. So please do not hesitate to leave your comments, your reactions, and your questions below as usual. Follow us on Instagram, on X, and on LinkedIn for regular market updates. Subscribe to our YouTube channel for daily market comments, and please do not forget to hit the like button on these videos to let us know that you enjoy them. So I will meet you again tomorrow after Tesla earnings. So until then, good day trading.